Hey everyone, and welcome back to another edition of Ray's Reviews. And in today's video, let's talk about why crypto prices are so low. Let's jump straight into it. All right, first of all, let's talk about stagflation and how it impacts crypto prices. Stagflation is defined as a period of high inflation and zero economic growth, and be warned, it is nasty as stagflation also includes high unemployment. And most people have never lived through a period of stagflation before, and that also includes myself, even though I look like a time wizard. In fact, stagflation is something we have not seen for over 50 years, since the 1970s. Now in the 1970s, stagflation was driven by oil shocks, where OPEC, or the Organization of Arab Petroleum Exporting Countries, led by Saudi Arabia, proclaimed an oil embargo on certain countries. And the result of this embargo was that the price of oil rose nearly 300% globally, from about $3 US per barrel to nearly $12 per barrel. And if you want to read more about the 1970s oil shock and the last time we experienced stagflation, I highly recommend this book, which I'll link in the description below. Now, during the 1970s, this was a rough period of time where inflation was greater than 8% and there was negative economic growth. Very similar to the situation we are in today, where oil prices almost tripled from an average of about $49 per barrel at the end of 2020 to about $110 per barrel, and that's where we are today. Of course, there are different factors today versus then, such as the impact of COVID, but we also have rising oil prices due to inflation and partially as a result of the US ban on Russian oil. And economic numbers were just released, and we had 2 consecutive quarters of negative GDP growth, followed by higher than 8% inflation. So pretty much everything sucks right now. No one is making any money. No one is happy. Everyone is upset, including my wife. Or maybe that's because I'm just a bad husband. Crypto prices like Bitcoin have dropped almost 75% from their all-time high. So I just have a couple of questions. The first one is, how did we get here? And why has Bitcoin fallen so much? After all, Bitcoin and crypto were supposed to be the safe havens. They were supposed to be the safe asset that would protect us against inflation or in stagflation environments. After all, when we look back in time and we study, let's take a look at what happened in the 1970s. Well, President Richard Nixon at the time of the United States, he nixed the gold standard. And then you also had the oil embargo. So in the 1970s, they pretty much doubled the money supply and turned on the money printers. And what happened? Well, this essentially blew up the demand for gold. You see, gold price actually went up 1,500% in the 1970s. And it is commonly said that in stagflation environments, value is driven up in the following 5 categories. And these categories are: number 1, treasury bonds; number 2, US dollars; number 3, gold; number 4, consumer staples; and number 5, real estate. But the one asset that the 1970s did not have was Bitcoin, aka digital gold. So why is Bitcoin, aka digital gold, not following this same trajectory? After all, crypto investors like us were supposed to be the early ones, right? Shouldn't our investment in Bitcoin have gone up in value? Like, why instead has our investment tanked? Like, is Bitcoin and crypto just too new of an asset class? What is going on here?
What is going on here?
All right, the second thing I want to talk about is financial deleveraging. Crypto assets, crypto bull markets, and crypto bear markets up to about 2018 didn't really seem to be directly correlated to traditional equity markets. It seemed to follow its own rules and not follow everyone else. And after going through 2 crypto bull markets and bear markets, I will say I have never seen in my life so much financial leverage or VCs in the 2021 crypto bull run. In the 2021 crypto bull run, you had many entities that used high leverage and either borrowed heavily to expand operations, like Bitcoin mining companies, or you have hedge funds that were using highly leveraged bets and futures to go deep into cryptocurrency. And you also had many retail investors that were borrowing heavily via margin accounts to invest heavily into cryptocurrencies. Because at that point in time, it seemed like the party would never stop and crypto would only go up forever. Everyone wanted to get rich quick in 2021. And we all know how that situation played out. The biggest example was Three Arrows Capital, which at its peak was managing almost $18 billion in assets. And after Luna collapsed, 3AC imploded. And I really think this was due to a combination of poor risk management, greed, and I think overall recklessness. Because they borrowed from almost every major lender like BlockFi and Voyager Digital, This basically resulted in a cascading effect on the rest of the crypto market. And boom, this has resulted in the position that we are in today, with not only crypto prices deeply down from their top, but ordinary savers like the people like yourself and myself who just put their assets onto platforms like Celsius or Voyager Digital being unable to withdraw. Weren't these crypto exchanges supposed to be the safe options? Now, personally for myself, it's really hard for me to see this happen because Bitcoin was born out of the 2008 financial crisis, where you had like severe financial losses of the mainstream population caused by the same recklessness and same type of institutional leverage that we are seeing today. So kind of what happens next? In my opinion, the depressed crypto prices are due to a combination of this period of stagflation that we're going through and this financial deleveraging that we need to unwind before things get brighter again. But despite the recent volatility in crypto assets and price drops all across the board, I think mainstream crypto adoption still looks very bright, but it will take time for all of crypto to rebuild and regain trust. And I personally think that the rest of 2022 will be ugly, with maybe things starting to improve in 2023, but we could always see like price action go sideways for a period of time, perhaps even over the next 18 months, maybe before the next Bitcoin halving in 2024. But I do have some bold predictions, so here they are. Number one, despite the problems with like Celsius, BlockFi, Voyager Digital, and all these other CeFi platforms, I think that CeFi is still necessary for mainstream crypto adoption. I just personally don't see DeFi and hardware wallets being the solution. Like, you and me may go buy a Ledger wallet and keep our crypto assets on the Ledger because we're a little bit more technically advanced, but I just don't see the mainstream population wanting to do this, nor would I necessarily trust them with this approach. The fact that you could lose your seed phrase or your hardware wallet is a horrific outcome in my eyes, and I just don't think that most mainstream people can be trusted with self-custody. I think there really needs to be a better solution for mainstream crypto adoption. Now, CeFi platforms like Crypto.com or Coinbase, if they execute correctly, perhaps they could be the solution. But then again, if CeFi platforms like Celsius or Voyager Digital were to fail and people were to lose their assets, this could set CeFi and the whole crypto industry back years in terms of trust and mainstream adoption. That's why I think guys like FTX and Binance, which are leaders in the crypto space, are stepping up to help. Number two, there could be a future where when you log into your bank account, the one that you're using today, your bank has the digital asset custody solution for you. Imagine you have your US dollar amount in your checking and savings account, and you also have a Bitcoin denominated balance in your bank account directly through your bank that you could convert to fiat at any point in time. Like, how cool would that be? And that would definitely help bring in a lot of mainstream crypto adoption in my eyes. And number three, this recession and crypto bear market will bleed to death the losers. Only the strongest projects will survive. Many projects will starve to death during this crypto bear market, this crypto winter. Many cryptocurrencies will go to zero. But number four, the projects that do survive, if they are a cryptocurrency, I think in a few years' time, they will significantly exceed their previous all-time high from 2021 once crypto mainstream adoption is here. And if they're a CeFi platform, I think they will be the future tech darlings and fintech firms that we bank with. I think, in my eyes, this is probably going to be the most brutal crypto winter we have faced yet. Like, we have a global recession, we have war, we have stagflation, we have financial deleveraging, and we have all these trust and integrity issues with all of crypto. It is not going to be easy. Only the strong will survive. It's really just a waiting game right now. But I am personally going to be patient and see how things play out. I'm willing to take a long-term approach because blockchain technology, in my eyes, is the most disruptive technology of our lifetime, and there are a lot of things to still be optimistic about. I think crypto has a lot of issues that still need to be solved, but the future is looking bright in my eyes. But I want to hear what you guys think. Let me know what you guys think in the comments below. Of course, with anything and everything, please do your own research and due diligence. Don't trust anyone, including myself, unless you've done proper due diligence for yourself. And with that said, I hope you guys enjoyed this video. Please like and subscribe if you did, and I'll see you guys in the